Hi everybody, welcome to the Finance This Property That podcast. My name is Dion Fernandez and I am a mortgage planner and finance professional. My goal is to empower financial legacies for generations, and I look to do this by using my over 13 years experience in finance and having special guest speakers like financial planners, accountants, buyer's agents, family lawyers who are experts in their field to provide knowledge and free education. And without further ado, let's get into our episode today. Hey everybody, welcome to this episode of Finance This Property That. Now, I haven't done a solo episode in a while, so I thought I would share a few things that have been happening in my world with a few of my client journeys and a couple of common themes that have been coming up. So wanted to share their journey, what we found out, and then the solutions and how we actually have helped clients. So without any further ado, let's talk about why the banks don't actually give you the whole picture. Now, this is not a bank lending slag off. It is just a real life scenario where a client went directly to their bank. Their bank said no, but clearly they didn't understand how to structure debt. And we'll talk today about, how banks assess lending risk, what brokers do differently. We'll go through the scenario and then talk about questions to ask your lender. If you're going directly to your bank, let's talk questions to ask them on how to figure out whether they're going to be the right fit or whether you've actually outgrown the bank or not. So let's get into it. So my client is an ideal client. They're time poor industry professionals. One is a doctor with very, very little time, and the other is an engineer, also in a very high profile job. So what they wanted to do, they came to me wanting to build their portfolio out. Now, what they already had a couple of properties. They went to their bank and their bank said, the structure, the banks said they couldn't do any other structure, and they also the capped at their borrowing capacity with that bank as well. When I looked at it, they weren't, but I'll get into that in a second. But just to give a bit of a high level understanding about how banks assess lending risk, they assess risk like we do, but we do, like as a broker, I do it a little bit differently. So when a bank's assessing risk, they only have one policy. If it fits, it fits. If it doesn't, it doesn't. It can be quite hard to mitigate or go outside of policy sometimes with banks. And sometimes they'll only look at what they have. And if you show them too much, then they can't unsee it. And neither can I either. So you've got one policy. Sometimes it's not black and white, depending on the lender that you have. The banks will sometimes only look at declared income, not stuff outside of the norm as well. So the flexibility sometimes not there with the policy. And then also you are limited from bank to bank with the flexibility on structure. Now, structure becomes really important when you're trying to build out a portfolio, what entities you use to purchase. Is it in your personal name? Is it in company trust structure? Is it an SMSF? So a lot of the banks, major banks won't lend under SMSF, which is a tool that we use, and also very restrictive lending policies for trust borrowers. So those are how they look at it a little bit there. It's quite restrictive. So what I do very differently is firstly quite a lengthy discovery call in relation to what are your goals, what are your challenges, and how do you want me to best support you. That conversation obviously is a little bit deeper, but that's the nuts and bolts of our first conversation. From there, I can determine what our logical next steps are and if I'm the right fit for you. A broker like myself has over 40 different lenders, and they all have different niches, policies, etc. I'm able to actually strategize your portfolio a little better because we don't necessarily use the same bank for every purchase or type of lending. So we're able to split loans across the bank. We're able to use interest only versus principal and interest levers, and also fixed versus variable as well. The biggest key, though, is being able to match the policy to increase the borrowing power to be able to increase your portfolio, not the other way around, not matching the purpose of the policy. It's really hard to scale when you don't have the right policy. And if you've only got one policy, it's next to impossible because you'll cap out with that lending. So back to my clients, one was a doctor, one's an engineer. They already have their owner-occupied property plus an investment, but were stuck. The reason why they were stuck was, one, it was all with the same bank. The bank were cross-collateralized both their loans and didn't, maybe it was the banker, didn't quite see outside of the box using different policies for LMI waivers, 100% of income for doctors because they're essential services. They're not shading the overtime and allowances by 80%, adding back things like pre-tax salary sacrifice that's not for a motor vehicle, which comes back into their account. So we can match that up, which all boosts borrowing capacity. So took the time to really understand what they're looking to do. I ended up revaluing all their properties, extracting equity, using the LMI waiver policy with a bank that takes up to 95% on investment and owner-occupied, and they don't pay those rates. They pay the 80% rate or better. We were able to restructure their debt, untangle the properties. So they've got more flexibility, release equity against each property, and then they're able to purchase more. So the next purchase we did was in a trust. So we set up that trust structure still with the same bank, and we went and purchased immediately the next property. Then we also had another plan in the background to purchase under SMSF because they'd already set up their SMSF as well. They'd done the steps before they even came to me. They had set the SMSF trust up, the cash management account had been set up, the money had been transferred, and they already had the Bear Trust. Dream client, because not a lot of my clients are as organized as that, which is okay, which is why you need my guidance. So now in 3 months, or not even 3 months, in 2 months, we've refinanced their home loan, got the equity out, we've purchased and settled on property 1, we've purchased and are about to settle on property 2 next week, and we've also got property 3 and property 4 ready to go in the wings. We may even do another purchase in SMSF and one outside of SMSF in another trust structure. But it just goes to show with the right strategy that you're matching the policy to the purpose and leveraging different banks' policies. We were able to go from 2 to we're about to purchase another 4. So we've gone from 2 to 6, and we'll do that in 6 months. For them, it's a game changer. They're high income earners, time poor industry professionals, but they saw the value in the advice and they've stuck to the plan. Very, very grateful for them for trusting me on their journey. And hopefully the other two, we're going to get these next 2 properties. They're also seeing key people in their team, like we're liaising with their accountants. If they use a buyer's agent, we'll be able to liaise with them as well. But they've relatively done this off the back of their own research. Cool. So based on that example, if you are going directly to your bank, you need to ask yourself a couple of questions. What is the long-term purpose of this finance? What do I ultimately want to achieve? Do I also want flexibility or certainty? Am I growing or am I just in a holding pattern? Who's assessing my loan? Now, this is the number one key. Are they just a normal bank lender? Or do they see me as a number? Or do they really understand my goals? And do they have the skills, knowledge, and expertise to be able to grow? Now, I'm not saying I've got some great friends that are actually excellent lenders and they work for banks. And even they say that, yeah, I can only do so much because I'm limited. I've only got one policy, one type of product line that we can use. And that's where we collaborate as well to be able to help. So I do work with bank lenders to help more clients. I don't pay them anything and they don't pay me anything. It's all about helping the clients and getting the best outcome. So if you are looking to grow your portfolio, you are a time poor industry professional like a doctor, lawyer, engineer, you are stuck, you've just been seeing your bank, well, stop. Come and have a chat to me. I'm very, very easy to find at Dion Finance Specialist on Instagram. My link in the bio will take you straight to my booking page to book a complimentary 30-minute discovery call. You can obviously look at all my podcasts on financethispropertythat.com.au, Apple, Spotify, we're all on there. And also the Emerge Finance website. I'm part of a bigger group, which we're here to support more staff, we're here to support more clients achieve their goals and ultimately build their financial legacies. And you can also check out the over 300 or close to 350 five-star Google reviews that Emerge Finance has also received. But again, if you're curious, you want to build a portfolio, you are time poor, come and have a chat. We'll see what we can do. But until then, see you on the next episode.